To explain to you here the difference between what's known generically as an HO3 homeowners policy and an HO5 homeowners policy. When comparing home insurance policies, if you have an HO3 on one hand and an HO5 on the other, it's important that you understand the distinction because there's one very fundamental difference on how certain things are covered, and it's important to understand that. There are also a lot of detailed differences that you can get into the weeds. We don't want to get too deep into those weeds for this presentation, but we really want to have you understand the difference, the fundamental difference. So HO3, HO5. First of all, when you're buying a house and the bank says you must have homeowners insurance, they're going to tell you that you must have at least an HO3. There are also policies known as HO2, HO1. We don't see those anymore because frankly the banks don't like them. They don't cover enough things that can go wrong. So how do these work? Well, for your dwelling, that is the house, anything that is permanently part of the building, if you turn the house upside down and shook it, anything that stays is dwelling, and generally speaking, anything that falls out is contents. We'll get to that in just a moment. But the way that the policy actually reads is what we call open perils. Now, open perils says we insure against risk of direct loss to property, if that loss is a physical loss. However, we do not insure loss for, and then they take away some things. For example, flood insurance coverage. If you live near the ocean or near a river that tends to rise, then you have to buy flood insurance separately. Earthquake insurance, same sort of thing. Earthquake insurance is something that some people choose to buy, some don't. And the other category, broadly speaking, is defined clearly in the policy, is what we call general home maintenance items. So for example, if the shingles begin to just get old and wear and you start getting little leaks in your roof, well, you should call a roofer and not your insurance company. However, if a storm comes up and blows those shingles off, then clearly that's an insurable item because a direct loss has happened to those. They haven't just gotten old and rotted. Here's where the difference really comes in. Contents coverage, or your personal property, or as George Carlin used to say, your stuff. This is the stuff that when you turn the house upside down and shake it, all of this stuff falls out. Under an HO3, they use what's called named perils, where they actually list what is covered. And so those things are fire and lightning, windstorm and hail, riot and civil commotion, aircraft, vehicles, smoke, vandalism, theft. Those sorts of things are actually listed. There's 17 perils that if that happens to your stuff, it's going to be covered. What the HO5 does that's very different is it uses the same approach as we used up here for the dwelling. It says we'll cover anything that happens unless it's specifically excluded. So if you suffer a loss, you don't have to then go to your policy and say, gee, I wonder if it's covered, but rather you can be pretty confident that it's going to be if you suffer a loss. One last comment is, on an HO3, typically these items that have specific limits, for example, jewelry, furs, any business property that you may have, or silverware, these typically have $1,000 limits. Business properties for most HO3s has a $2,500 limit, but with the HO5, most carriers will have $5,000, $5,000, $5,000, $5,000 limits. So you get a little more on those areas where there are limits built into the policy. Just the last thing that we'll say is, generally speaking, an HO5 is only going to be available to newer homes in well-protected areas. This is much broader coverage, and insurance companies don't want to offer it to everyone, frankly. Given the option of choosing an HO3, HO5, we would recommend that you buy the HO5 every time. Typically, it's not that much more expensive, but when something goes wrong, you don't have to prove that it's covered. They have to prove that it's not.